Joe, I cannot buy a house because I don't have 20% to put down.
Well, actually, you really only need 5% down when we're talking about conventional loans. More often than not, people do think that you need 20% down because that is the point of where you won't need to have any mortgage insurance. But it's a small price to pay for being able to get in for what would be tens of thousands of dollars less of a down payment. So,
Everybody, I'm Devin Kroner, Coldwell Banker.
Joe Brandenburg, preferred rate, guys.
And today we're going to talk a little bit about conventional loans. This is not your mama and daddy's conventional loan program, Joe.
Definitely not. Definitely not. Well, back in the 80s, when people were buying houses for, 6 raspberries and a nickel, just kidding, closer to $100,000. $100,000 would buy you a heck of a house back in the 80s.
Mm-hmm.
That means that 20% down was significantly easier to get a hold of. Well, now the average price for a home in Northern Kentucky is $310,000.
Not $100,000.
No. Most people don't have $70,000 in their bank pocket.
You know, I looked at my bank account earlier this morning and I do not.
I'm getting close. I'm kidding. But yeah, so realistically, instead of shooting for this 20% down number, be okay with paying a little bit of mortgage insurance. It's a small price to pay. And go ahead and get into the home instead of renting for another year and start building equity.
Mm-hmm. Okay, so I got some questions now because you said a lot of different things.
Sure.
And my mind is blown that I don't need 20% down, but that's also good. But first of all, Joe, what is a conventional loan? What makes something a conventional loan?
Conventional is just the most run-of-the-mill. It's your standard. It's not unusual. Conventional, usually, you got 5% down. They have arguably the most competitive rates. You don't have to have a government appraisal because it's not a government-funded loan.
Really?
Absolutely. So if you have a house in mind that might need a little bit of work before you get in, conventional's probably the way to go.
Now, there are different types of conventional loans. You can do a 20% down conventional loan, right?
Oh yeah, absolutely.
And if you do, you mentioned private mortgage insurance or PMI, as we call it in the industry. And I'm going to ask you what that is in a moment. But if you do 20% down, you don't have that, right?
Right.
If you do under 20% down, you will. But what would be the benefit of doing 5% or 10% and having PMI versus trying to find the 20% and not?
Right. So 5 to 10% down, the idea is it's keeping more money in your pocket. So if you did find that house that needs a little bit of renovations, maybe you could use it for that. PMI, and we want to talk about what exactly that means. Basically, it's insurance so that in the event of you defaulting on your mortgage, if you stop making payments on your mortgage, then the bank has to reclaim their asset and make it into liquid money so that they basically put it back on the market.
And that does happen. Thankfully, it's not happening a lot right now because home prices continue to appreciate fairly well and a lot of people have equity. So even if they do get into a default situation, a lot of people are able to work out a deal where they can refinance, they can lower a payment. Not always. Every situation is unique. But again, the bank wants to protect themselves if that were to happen. Okay.
Sure.
But if they have 20% down, you don't have to have that because then you've got a decent amount of equity already in the property.
Right.
Is that correct?
Yes.
Okay. So that's why you have private mortgage insurance. Anything else about PMI, private mortgage insurance, that people need to know and understand?
Not specifically. It's not too heavy. I mean, it really is based on the price of the home. But if you're talking about the cost of private mortgage insurance, in comparison to trying to put more money down, the cost of private mortgage insurance is almost insignificant.
Yeah, so it adds a little bit to your monthly payment if you have it.
Yes.
But again, if you're talking about I need $70,000 down versus $5,000 or $8,000 down, that $100 extra a month, for instance, is very, very insignificant in most cases.
Right.
All right, so that's the private mortgage insurance. You talked about you can have different amounts of down payment. You talked about what a conventional loan is, generally speaking, but then you mentioned something about them not needing an appraisal. Talk about that, Joe.
Yeah, so without an appraisal, there's lots of properties that you can have an appraisal waived on. More often than not, you'll see an opportunity for like drive-by appraisals, where really they just compare the property to other
The
properties in the area that are similar. So similar square foot, similar amount of bedrooms, similar amount of bathrooms, in a similar area. So it makes it a lot easier to have a rough estimate of what the home would be worth.
Interesting. Now, is this something that can be lender specific? Are there some lenders that may still require an appraisal on a conventional loan, or is this across the board?
That would be lender specific.
Okay.
So it's not with everyone. Your more competitive banks are eager to participate, though.
Such as preferred rate?
Such as preferred rate.
So that can be an advantage because, again, an appraisal can be great and can be very, very helpful, especially if you're using it as an investment property or something like that. But if you're buying this as your family home, you may not care that it's, worth whatever as long as you can finance it. You just want to get into the home and you're going to make improvements over time. You're going to own it over time. You're going to see the value increase.
Right.
So that appraisal, waiving that appraisal can take some pressure off, maybe in a competitive market. It can make your offer a little bit more competitive as well, because if somebody has to have an appraisal and there's a question, maybe if it'll come back at or above value, that can make your offer more appealing. But also it can save you a little bit of money as well, the money in your pocket. That's what we're going for.
Right, absolutely, yeah. Really, the big difference between the two styles of appraisals, there's one that is you're able to do drive-by, compare it to other properties like that in the area.
I just thought of Mrs. Doubtfire. It was a run-by fluting.
Oh my gosh, rest in peace, Robin Williams. Goodness. But with your government-funded programs, FHA, USDA, VA, they actually go through with a list and make sure that very specific things are not wrong with the property. So peeling paint, any sort of busted windows, any sort of work that needs to be done that is not done yet, all that has to be done before it's funded by VA, USDA, anything government-oriented. So. That's really the big difference.
So that can save you time. It can save you money. It can also give you flexibility if there are certain things that the house is livable, but maybe something needs to be finished, or there's flooring, but there's not carpeting. And you're like, I don't want the seller to put cheap carpeting in. I want to get my own carpeting.
Right. I really like that term livable. It has to be livable even for conventional.
Yes, absolutely.
Right. You have to be able to live in it.
But let's be honest, standard of livable can look very, very different in different situations. And my biggest thing is when it comes to datedness.
Right.
I've had a lot of situations, Joe, where there's a house where everything works, right? The appliances work, the mechanics work. But, that furnace is older than I am. I sold a house in Bellevue a couple of years ago where the furnace was 60 years old. I kid you not, 60 years old.
Yeah, that's old.
And the FHA appraisal said absolutely not.
Yeah, not a chance, I think.
So thankfully, my young lady at that time was in a position where she was able to flip to a conventional. She just wanted a 3.5% down, but she was able to flip to a conventional, brought a parent on as a co-signer just because she needed the money, and we didn't want to have to go through the hoops of gift funds and all that.
Absolutely.
So mom came in with a little bit of money. We went conventional, found out that there was one gasket that needed to be replaced through the inspection on this 60-year-old furnace. And it took us calling 17 different states, but we found that gasket. And so instead of having to replace the whole furnace and the system, because all the ductwork was going to need to be redone in this place because of this old furnace, and the furnace was huge. It was like as big as a car.
Yeah.
In this Bellevue basement that I could barely stand up in. I think they put the furnace in before they built the house.
They built the house around the furnace.
It really may have been that case. So all that was going to have to be, we're talking tens of thousands of dollars in work that was going to need to be done. But the furnace worked, it just needed this gasket.
Right.
So we found the gasket, took a little bit of work, took a lot of calling, 17 states, but it was a $65 part with $12 shipping. Got the gasket, so everybody was happy. And because it was a conventional loan, even though it was dated, did not have to be updated.
Right. The bottom line is that they're far less strict with conventional loans versus government loans.
But it still has to be livable.
Right, it does.
Can't be full of mold.
Nope, can't be full of mold.
Can't be falling down. It can be pink. I was going to say it can't be pink, but it can be pink.
Windows have to be intact. Not
So,
new.
They have to work.
Yeah.
But even if they're older ones, even if they're single pane, even if they're not energy efficient, that's something you may want to replace
Absolutely.
over time.
Right.
So all of these things are very, very important. Here's the thing though, guys. Here's why it's important to work with professionals that do this regularly and know what they are doing. Hi everybody, I'm one such professional, but also
Joe Vandenberg, how we doing, guys?
this guy right here can walk you through that process and look at not only the different loan types and what might be best for you, but then say, hey, here's why this may be a benefit, especially if you're looking at an older home.
Absolutely.
A home that you're going to want to go in with your vision and recreate it, but you can move into it and live in it now. We can make that happen. We can make it happen without 20% down. You're a homeowner.
And then it's all uphill from there.
It's all over by the crime, baby. Give us a call. Devin Croner, Coldwell Banker, 859-962-7978.
Joe Vandenberg.